Yo, what up? Happy Sunday, everybody. Welcome back to our Gold Rush weekly watch list. Hope everybody had a good weekend. Hope everybody had a nice, calm time. Um, this week in the market was kind of tricky. Um, and I'll explain why in a moment. But I'm hoping that in the next coming couple of days, right? Next, maybe this week, you'll start to see a little bit of more movement, potentially next week. And that's what we're looking for, right? It's been really tough to trade, especially this past 2 weeks. If you look at SPX, which I have on my screen now, and if you look at the daily chart, let me just make it a little bit bigger. So on this daily chart, we're still obviously in this downtrend. We had this broadening formation down from the beginning of last year, right? When we hit the high of was it 48.18 back on January 4th of 2022, right? That was the high. And we've kind of just been slowly working our way down ever since then now, forming lower highs and lower lows, right? Since we kind of bottomed out on the 13th of October, and we've been going in what seems like an uptrend, but we keep getting back to this 200-day and right around this kind of trend line and rejecting hard and falling down from it. So I'm looking for, and then last week and the past couple of weeks, actually, going back to that thought, the past couple of weeks were very tough because we've been kind of ranging between this 3,800 level and the top of this line, which is around 3,890. And finally we broke the range on Friday's candlestick. To come back and test the 50-day. So I have a little bit of hope in that we're going to actually break out of the range and go back to, be able to maybe swing overnight here and there, right? So definitely a tough market, but I'm going to go ahead and get into my analysis real quick. And if you guys, in the meantime, while I'm going through these, I have a handful. I got about 12 or so that I want to go over. But in the meantime, if you guys have any requests, go ahead and start thinking about them. And I'll give you guys a second set of eyes. So if we look at SPX on my top left corner of the chart, you'll see the monthly. On the top right, you see the weekly. On the bottom right, you see the daily, and on the bottom left, you have that 1 hour chart, right? So let's start with the monthly. So on the monthly, same old story, right? Just forming lower highs and lower lows, downtrending, broadening down, right? So far we have we broke the range of November with December's high pretty much at the opening of the month, and we fell, but we didn't break the range of the low of November, right? And coming into January, we also formed a higher low to the previous couple of months. So that's 4 months of higher lows, back-to-back higher lows in 4 months so far, right? Now, I say that with a grain of salt because we're right at this trend line, which has consistently all of last year pushed us down lower, right? So we're just right at that level. So, we are still forming an inside month. Let me zoom in on it a little bit so it's a little bit clearer. Forgive me, my throat is a little bit scratchy. I'm coming off of a cold. So we are forming an inside month. And of course, it's so early in the month that there's no reason to think that we would form an outside month right away, but we're forming an inside month. It's a green candlestick, and it looks like it's headed to try to retest this trend line. But as you can see, if we move over to the weekly, we've been at this trend line, here at the beginning, and then a couple of weeks here, a couple of weeks here, a couple of weeks here, and every time we get to that trend line, we always fall down pretty hard, right? Let's look at the news. So jobs data, kind of the numbers were positive, and so it brought down worries in terms of how aggressively they're going to continue rate hikes, which I think they're going to still go. I think that they're going to continue to move whether jobs numbers are good or bad, right? I think that's the plan, and they're going to stick to it for the next 4 quarters at least. So I think we're going to be in pain in terms of interest rates for the next 4 quarters. They want people's money not being spent. They want people's money in the bank so that the banks can lend, right? They want to bring the prime rates back down. They want to bring the rates for mortgages back down, for auto lending back down. And part of that is keeping people's money tied up in banks so that banks can get more favorable rates. So it's like kind of a delayed gratification vibe, right? You put your money away now, and you play the patient play, and then hopefully you're rewarded with some good savings rates, and then ultimately some good rates for mortgages and for loans. So anyway, that's the news. You see that we're kind of there's kind of a really aggressive triple tap forming on this line right here. We're above the high of 2 weeks ago, as well as last week. Or rather 2 weeks ago, as well as the week before that. And I mean, I don't think that we're going to come back to test this high of this week of the 12th of December. I think it would be way too aggressive. Or rather, I'll say maybe we won't do it in 1 week. Maybe we'll do it in a couple of weeks. But then at that point, it will be a full downtrend break, right? So I'm just going to put my foot in my mouth there. I'm not going to put my foot in my mouth there. I'm just going to, just say that right now, it looks like we broke the range. If we move over to the daily, and I'll just call what I see instead of what I would like to see, right? We broke the range that we had formed on the daily with a high of 38.89 and a low of 37.64, right? That was our range for the past 2 weeks. And we finally kind of broke out of that range. SPX came and tested the 50-day, and you see that it sold off a little bit, just a little bit, right? The 50-day sitting at 39.04, and SPX is sitting 15 points below that. So, or rather 19 points below that. So, so not a drastic sell-off, and we still have the 100-day and the 20-day moving averages that can potentially act as support in case SPX wants to kind of base around this area and maybe fall, see what happens around this area, and then work its way back through that 50. That 50 is going to be tough. If we look over at the hourly, which is on the bottom left-hand side, the last time we were at that 50, let's pull it up. The last time that we were at that 50-day was over here back in the 21st of December, where we went sideways for pretty much the entire day, all day, right? We kind of gapped up, we pushed, and then we went sideways right along that 50 and fought it. 1, 2, 3, 4, 5, 6 30-minute candlesticks. So 3 hours straight of just fighting across that 50. And then the very next day, it gapped down and fell pretty hard, right? Made a new low and everything. Now, the last time I had my analysis last week, I noticed that there was a potential head and shoulders forming, inverse head and shoulders forming on SPX. And as you can see by the final price action for the week, we are forming the higher low, the higher high. We've broken this neckline, this neckline here, this kind of downtrend line. And we're right back at the 50-day. So it does look very strong. However, I need to see it above that 50-day. And more importantly, I need to see it above this trend line here before I can really say that this feels really good. And again, we got the 200-day sitting right there. So, I mean, maybe this is a short-lived rally into the 200-day before we get smacked down hard again. So not really quite sure. I think that we have some upside based on what I'm seeing in the market. I know that futures are open. So let's take a look at futures real quick. So this is Friday's price action right here. Let me just zoom into this hourly. Zoom into the hourly. Okay. So this is Friday's price action right here. And where we kind of rejected right here on the 50-day. The 50-day for SPX is slower than ES because ES has more continuous candles. It has more candles to base off of, so it's a little bit a slightly different spot. But ES pushed into the 50-day, rejected a little bit at the close of market on Friday, and then it opened up today, and it kind of broke above the 50. It's kind of holding it, testing it as support, and so right now we really need to just kind of form a new high above this candlestick here, which is 39.2875, before we can really be, get bullish for the week, right? So, or for the day, for Monday. It could be short-lived. I mean, I'm not expecting much. If you look at the MACD's already formed this kind of positive cycle, and now it's working its way back down. The MACD line and signal line are very high. It looks like they're ready to turn down, right? Same thing with TTM. TTM is very high. It looks like it wants to turn around. And if we look at the RSI is sitting right now at 67.86. So that's very high. And typically when it's at this level, it usually wants to fall back down to kind of revert to the mean. So we're going to see some pullback, hopefully in pre-market. I mean, either way, I don't care which direction the market decides to go in, as long as it chooses the direction firmly, right? And continues to give us one direction all day. So that's what I see for SPX. So let me just I'm gonna get into my list right away. I totally missed on Starbucks last week. I had a bearish bias on it. And I had wanted puts, and I held some puts overnight, and they didn't work out well for me. And I'm never bearish on Starbucks. I'm usually always playing it to the upside. So I hope that nobody got caught in that with me. But if we look at the monthly, Starbucks is forming what looks like to be a 3-bar play on the monthly. We have this wide range expanding bar breaking above all previous resistance, right? These 3 months worth of resistance, expansion to the top. And then we got a resting bar, right? We got a bar that's kind of like not really breaking up higher and not really breaking down lower, just kind of chilling in the same vicinity as where this one closed. And then we got this third bar, which is the current bar of this month of January, where it's kind of breaking out and making new highs with volume, right? With volume, that's the key part. So, and then we have another catalyst in earnings at the beginning of February 1st. We got earnings for Starbucks. So good catalyst. And I think Starbucks is like a good seasonal stock, right? Like this earnings season might capture all of the pumpkin spice lattes and all the kind of the seasonal stuff that Starbucks is known for towards the end of the year, right? All the Christmassy stuff. So all of those earnings will be captured in this move now. If we zoom out on the monthly, we have this broadening up. And I mean, really, I had no reason to be bearish those few days, right? It might have been like a 10-minute move or something that I got married to. But my ultimate target for Starbucks is going to be this 120, and that might occur, maybe not this month, maybe next month with earnings, right? So I'll be watching that number. That 120 will be strong in my mind for the next couple of months, next couple of weeks. If we look at the weekly, we had our higher high here, first higher low, second higher high, second higher low, third higher high, third higher low, and now we're forming new highs. And what I'm looking for is for Starbucks it's pretty much taken over the full range of this candle here, the January 10th, 2020, what is it, 2022? See, yeah, the January 2022 candle, that's crazy. It was like it just formed the cup and handle pretty much all year, right? All year just forming that cup and handle. And now it's a year later, it's ready to break out from that level where it failed before. What it is going to do, though, is it looks like it's going to go back into that previous range that it was in for a majority of the time last year, which is this box right here, right? So, I mean, this high looks like Swiss cheese right now. What's the high? 107.01. And what do we hit this week? 107. So we missed the high by a penny. So, somebody hit the bid on it, right? And bring it up to above a penny. And we just broke the high. I think we're going to break out on this week. I think we're going to continue the move. This came back, pulled back, found some support, right? Found some previous support on a fib level too, which is very nice. I think there's some moving averages here on the weekly as well. And then just made a nice move. Let's see what's going on with them in the news. California Restaurant Association files lawsuit to block fast food workers. Okay. Market chatter. Starbucks reportedly declines union contract at 21 locations. So that's bullish, right? It sucks for the workers, but it's bullish. And China's ditching zero COVID policies. Watch these stocks. So I think this is part of one of the stocks that's benefiting from what's going on over with China and their COVID. Clearly, right? So break out above that 107.01, and then we can try to get into this range here, which is between 117.80 and 107.48. So I fully expect for Starbucks to be trading within this range in the next couple of weeks. Will it range the way that it did, right? Where it formed this kind of head and shoulders and fell? Maybe. Who knows? I mean, we do have this broadening up, so we do have a lot of upside to capture, but will it do it right away, or will it kind of go sideways for a little bit? Who knows? But I like it to the upside, especially after these big gappy moves, right? This big gappy move. The reason why I was bearish on it is because the last time that it was at this level here at 105, it fell and it kind of went sideways a bit. The next time it was at kind of that 105 level, it fell hard. So I was looking for, and then I saw that it kind of rejected and slowed down a little bit. So I was looking for it to reject hard again, right? And give me kind of a shoulder, head, and then like another shoulder over here before we continue up. But Starbucks was very, very strong. and does not care how I feel about it, right? It just kept going, like the Energizer money, right? So I'll be looking at like 108 calls. I like to play these close to the money. So I'll be looking at like 108 calls. We could layer from 108 up to 110, up to 115, 120, whatever, depending on how strong it goes. And if we look at the hourly, I mean, it sets volume shells, and it kind of stayed around it on these days. This is another reason why I expected it to fail, because it couldn't reclaim this volume shelf here from Wednesday. It couldn't reclaim Wednesday's volume shelf, so I expected it to fall. But alas, right? And it kind of gapped up, 3-bar play to open and continue to move, and made a brand new high at the end of the day. And the sellers kind of took some profit at the end of the day. So we'll see where it opens up. As long as it stays within this range and these volume profiles, right? As long as it stays above these volume profiles, this one, and even I'll let it come down to as far as this one. I think Starbucks has a lot more gas in the tank. So that's Starbucks. The next one I have is JP Morgan. And a lot of these are going to be a repeat of last week. And I've been finding good, when you catch it properly in terms of timing, I've been finding that works out very, very well for me. And these things have like 2 or 3 weeks in them, and maybe even a month in them. And so why not capitalize on it, right? So JP Morgan looks beautiful. And I haven't even looked at the monthly time frame until right now. Lower high over here, higher low over here, right? We have this low here, and we have this low way down here, 2020. So higher low, big gappy move, 2 months straight. And then it kind of formed a resting bar. It did pull back a lot. But the range of this bar is still inside the range of this bar. And now we have a double inside bar on the month. Double inside bar on the month. This is very clearly going to break through this level, in my opinion. Just based on, where we are with time, where we are in terms of the market, in terms of the cycles. Seasonally, I'm not sure if banks perform well. Yes, they do. They do, because around this time is when banks start to announce their buybacks for the year. So, and when do they have earnings? Let's see. The 3rd of January. So it already happened. What was the result? It's here. It's the 13th of January. Sorry. The 13th of January. So they have earnings. So around this time is when banks are expected to announce their buybacks. So seasonally, this is a strong time for banks. JP Morgan has a technical setup on a monthly that you cannot ignore. Did we hit a new high? Let me see. High 138.18. 138.66. So we did break out a little bit on December, but then we've kind of fell. And then January, we're kind of recapitulating and trying to come back to these new highs. So, I mean, to me, it's not a double inside bar, but it's very close to one. But we do have an inside bar looking to break to the upside of the monthly. If we look at and earnings is the best catalyst for it, especially this time of year, especially with the rate hikes. All this stuff is great for banks, right? Now, if we look at the weekly, we have this bull flag that formed, as discussed last week. And this past week, we broke out of the bull flag, and now we're just trying to retest this high of November, right? Trying to take out this high of November so that we can come back and recapture this high back here of March of 2022. That's what I'm looking for. That's my ultimate target. 143.93. We could call it 144, right? Above 144, you can get 150. Sorry, above 144, obviously 145, and then from there 150 will be the next target in my mind, right? Right around where this body opened up February of last year. So it looks like, and same setup as on Starbucks, kind of a cup and handle for the year, right? A cup and handle for the year, which is really nice, right? To see shake out. Very clean bull flag breakout. And so I'll be looking at the 140s, the 145s for this week and possibly next week, depending on how the setups show themselves, right? If we look at the daily, so we had kind of a doji indecision day, new high, came back down, doji indecision day, but found support at previous resistance. And then Friday, we kind of just gapped, and Friday, everything went crazy. Everything went crazy on Friday. So now we're just looking to recapture that high again, right? Just that high right there on the end of, or the beginning of December. Excuse me. So my levels for this would be high of day. Let me clear all these drawings, remove drawings. High of day for Friday, high of day for December 1st. And then we'll do one at, let's call it 140. And then what's the size of this candlestick? $5. $5. Okay, so $5. So let's do 142.50 to cut that 5.5. 42.50, and then we'll do 145. 145 is the final target for this week if the trend continues, obviously. Those are your targets for the upside. And then for the downside, I mean, if you want to take the low of day or either the open or the low of day, whichever one. Obviously, the open is a little bit more risky, but it'll give you a better play if it moves all the way down. And I'm expecting it to try to retest this 20 and 50-day moving averages, the blue and red lines here. Based on the hourly, which is on the left-hand side, bottom left, we kind of had a gap up and then push down, gap up and then push down. And then it kind of went, it almost bear flagged on Thursday. And then buyer stepped in immediately on Friday and brought it way back up to form a new high for the week. So the buyers were in control of everything this week, pretty much, right? I'd like to see it recapture that 138 and stay above 138 in order to continue the upside move. If it can't continue that upside move by capturing 138, again, I'm looking for 135, and then I'm looking for 133. 135 and 133 to the downside for JP Morgan. But overall, I'm bullish on JP Morgan just based on the time frame. Where are we? Bullish bias based on how it's lining up on the larger time frames, and also, you know, not only the monthly but the weekly and the daily, right? It's very bullish on multiple time frames. So time frames are all positive for this right now. Next one I have is, let's see, Boeing. I don't want to say much about Boeing. I mean, Boeing, it was on the watch list last week. We had the inside week last week, and we were looking for a break to the upside. I really slacked on not calling something out for this. And I won't get into why, but anyway, you know, that's what these calls are for. You see a setup that I'm discussing here, you like it, you go ahead and just keep it on your watch list. You set your triggers, you look at the contracts, and you take it. Right? Half of the homework is already done for you. If you agree with it, then, you know, please take it. Don't wait for me, because I have so many distractions throughout my day. But anyway, Boeing, I mean, you know, it looked like it was ready to go based on all these green candlesticks. We had the inside bar, and then it didn't even, I think it opened up and came down and tested the high of the previous week, and then just hit a rocket ship, right? No pun. But Boeing, and so it's just like, you know, on the monthly, we had a double bottom on the monthly. We got the massive kind of parabolic move on a weekly. On a daily, we had it was kind of going sideways a bit and testing that 20-day. And it completely went insane and just made a nice, very clean move on a daily with very little sell pressure on these candlesticks, right? On Wednesday, Thursday, and Friday candlesticks. So I'm looking for a potential continuation into 220. 220 is a nice round number. I don't know if it's going to go much beyond that, or at least maybe it'll kind of pull back. I actually have here 223.23, which is a previous pivot level. But if I'm more conservative, I would probably set one kind of right here, right at 219.72. So 220 is a target for this week. I think we can hit it very easily. I think that above 220, we'll find a little bit of pressure, a little bit of sell pressure. And the daily is just, I mean, the 1 hour is just very, very beautiful. You see all the volume stepping in with conviction towards the end of the day to continue to push it up. And we're well above all the major moving averages on the daily. And the 200 looks like it's finally hitting a U-turn, working its way upward, right? And we haven't had that in quite some time. Last time we had that was back here in 2020, right? So it's a good sign for Boeing. So I'll keep it on watch. I would probably be looking at the 230s, right? 230s, 240s, maybe the 230s, just to keep it safe and within the range, maybe 220s. You know, maybe the 230s because they'll be nice and cheap, and then you can sell at 220. You gotta capture a nice $7 move. And I bet you those contracts would be profitable, more than profitable for you, right? With a $7 move. So Boeing, that's Boeing. Next one I have is CAT. And CAT was another one that we were looking at last week. The reason why I liked it was I actually liked it. I liked it long, even though it was at the top of the channel and looked like it wanted to fall down. I liked it long only because it kind of went sideways. It fell It fell here, broke some previous support on these 3 weeks, and then buyer stepped in and brought it right back to the top of that channel. So, you know, and again, I think Cat was one of those that I was like, it really depends on. And another reason was we had the golden cross, the 50 crossing through the 200 to the upside on the daily chart. And Cat was one that specifically I said, if the market supports it, Cat's going to make a new high, right? So that what that means is if the market was bullish and bulls had control, Cat's going to make a new high. If the market's not in control, then Cat's not. It might just go sideways or it might just go back to the bottom of the channel. So, and the market supported it. You know, the market supported it very well, and all that action came in on Friday, because look, it went sideways pretty much all week until Friday where it gapped up. So if the market continues to support it, then I think that Cat will be poised to break 250, and then from there kind of make new highs. If we go to the monthly, yeah, this is all-time high for Cat. This is all-time high. We're at all-time high right now for Cat. So no reason why I won't continue. No reason why I won't continue. Right? I mean, we had some sellers stepping on Friday. If you look at the bottom left chart, we had some sellers stepping on Friday. You know, I mean, you got to take profit if you bought it over here, or if you bought it back in 2020, and now we're at all-time highs, and you miss your chance to sell when it hit this all-time high. You're going to take some profit. I mean, what are you going to do, right? Money's money. You got to put some money in your pocket. Otherwise, what are we doing this for? So nice move on top of the channel, breaking out of the channel. Maybe it'll pull back to retest it, find some footing, and then kind of work its way back up. But I really like Cat, and I'm going to continue to watch it this week and next, especially after this kind of 2 weeks or almost 2 months of sideways movement here, right? November 11th was when it kind of started to form this channel, and it's been going sideways ever since until, you know, this finally broke out on Friday. There's also kind of a little inverse head and shoulders vibe in here, but yeah, I mean, at the end of the day, it went sideways. We got the signal here. We got another signal here, right? Pretty much the same signal, bullish signal. And yeah, and then I think they have earnings. They have earnings way in the beginning of February. So we have about 3 weeks before we have earnings for Cat. So this will be a good time for them to run. And I like it. I will be looking at the Cat. I like to play a little further out. I'll be looking at the 260s. I wouldn't look too much further. Maybe 255s, 260s. I wouldn't look too much further than the 260s, unless like maybe the 265s and 270s, 275s. But they have to be very juiced. You don't want to be the only one in the chain, right? You want to make sure that you're joining a party that's, you know, where there's a lot of people, right? So if you see me call out like a 270 or something, it's because the chains are showing a lot of activity, lots of volume, lots of open interest. Maybe we'll get the 270s or something and 275s for February, just to give us some more time and capture that earnings play for real, right? So that's what I like for Cat. So I'm going to go through the next one, which is DKS, another one that we played last week. After DKS, I want to take a look at some of the ones you guys have, and then we'll go back into my list. So Dick's Sporting Goods. Let me just take a sip of water real quick. Okay. So Dick's Sporting Goods. Same setup as Cat, kind of, right? Cat's a little bit further ahead in that it's formed a new all-time high. Dick's is still a little bit of ways away from the all-time high. Dick's is about $20, $19.31 away from all-time high. All-time high occurred at 147.39. So I think that we're gonna go back to that level. And Dick's is showing a lot of strength. Just looking at how we had like 1, 2, 3, 4, 5, 6, 7, 5, 6, 7 back-to-back down candles on the month, that we've kind of reversed that trend pretty hard, right? And then we have that inverse head and shoulders forming on the monthly, right? This inverse head and shoulders here forming on the monthly. So, and the neckline, I had the neckline as like 120, nice even number. Or my neckline, I had it at this red shaded area, which we chopped around with for a little bit on the weekly. But we finally kind of broke out of that range, as you can see. right? We finally broke out of that range and we're forming a new highs that we haven't seen since November of 2021, so over a year ago, right? So it's the same thing. It's like we've kind of went sideways on a bunch of these for a year, or we went down and came back up on a bunch of these for a year. Now we're breaking and testing those levels again. So I mean, if you got into it this past year, it was a good year to learn. I think it's still a very good time to learn, but I think that once the next bull market comes, I'm not saying it's now, it probably won't be here for the next, maybe another, true bull market probably won't be here for another like 6 to 8 months, right? But once you see that it kind of goes sideways like this, down, up, sideways, up, and if you're learning these patterns and you're like taking your time and you're being strategic, then when we do get that bull market, it's going to be a piece of cake for you guys, right? So we have the head and shoulders on a weekly, forming new highs on a weekly. We had that morning star, which occurred over here, right? This past week, or rather this past 4 candlesticks ago to 2 candlesticks ago, we had that morning star reversal pattern. The reversal continued to break the previous high, make a new high. We got the flag breakout on the daily, which was here. This breakout right here is what I was looking for, right? We had the flag here, and then we broke out, and we even gapped up, right? So DKS looks very, very strong. This is one of the ones that we played last week and we printed on it, so good for everybody if you held on to it into Friday. And if we look at the hourly chart on the bottom left, we can see that it's just been trending upwards by forming higher highs and higher lows, right? You got your highs up here and you got your lows down here, higher highs and higher lows. Very, very simple. So yeah, I think there's a continuation, especially with when are their earnings? Oh, they just had earnings November 23rd. Okay, so we don't have earnings for a little while, but I think that this is a strong season for DKS. They're one of those companies that, again, they had a bunch of supply that was liquidated, and even with all this supply and them like selling at a crazy low price, I think it was like the perfect storm for them, kind of, because people didn't really have a lot of money to spend. So they went to retailers such as these in order to buy at a discount, really good product at a discount. Like I bought some stuff from here for Christmas, and I never shop at Dick's, but I bought some stuff and I was like, oh, all right, cool product and good price. And when I check back, I always check back to see what, if things they go for a better price or whatever the case is. And the items that I bought were all sold out. So if you have a lot of inventory and you're liquidating and you're selling out, then it's very strong. So I think there's more. I think there's, kind of right now we're in what's called gift card season. So I think people are going to, be spending money in places such as this, in Walmart, Costco, BJ's, Lulu, right? So I think that we're going to catch a positive drift based on, the season that we're in. If we look at the daily, we're sitting above all major moving averages. We've came down and caught support on the 100-day. We're a little extended from the 200-day, but that's a good thing. 200-day has been pretty flat since this date, since end of September. It's been pretty flat, and now it looks like it's turning and curving upward. So that's very nice. So I like DKS to the upside. I want to see a retest at 140 level. So first level I want to see a break is 130.67. 130.67, above 130.67. Let's look for, I'm just going to play the candlesticks, the highs up. Keep it simple, right? And then we have a little bit of a gap above that. Play it to like right there. So above 130.67, we hit 132.75. Above that, 135. Above that, 136.50 is a kind of a round estimate, and then we'll call it 140. 2-week play. But before it's a 2-week play, I need to pull back a little bit. I need to go sideways a little bit. So I'll be watching it, hopefully based around this level here at 128, before we can find a major upside move, major continuation, now that it's broken all resistance, right? So let's see, what do you guys have? I'm looking in the trade floor. I'm also looking in the hotline chat. Let's see. Yes, JP Morgan, Citibank, and Bank of America, and then XO. So let's look at the banks overall. XLF, they all report this week. I think they all report together. Look at Citibank. Citibank has like kind of it's kind of in a down channel. Uh, it's not that much of a down channel. It's more like a falling wedge. Now that I'm looking at it, it's actually kind of an inverse head and shoulders. Right, we got that, and we got that higher low, which is what qualifies it to me. Inverse head and shoulders potentially, right? They have earnings on the 12th, so just in a couple of weeks. Rather next week. This week. Yeah, this week. They have earnings this week. So Citigroup is probably one of the first to have earnings. I bank with I have an account with Citi, and they're constantly all these banks, every single bank, they're all hitting me up trying to get my money to put into their savings accounts. And you know what? But it's been that way. The only thing that I've noticed is that the rates that they can offer are much more. Now I'm not just like throwing them out. Like now I'm like reading them, like opening them, reading them, and then ripping them up. Right? They're not just getting straight thrown out. So they're a little bit more attractive than they were in the past. But I do see like an inverse head and shoulders here. The weekly gives me a nice clean vibe above this strong hammer. I bet you there's still a bunch of sellers there. And then we can just take out these highs, the previous highs, play that pivot. 0.01 savings for interest. I think that there's some banks that are offering way higher than that. Way higher than that. I know JP Morgan's is terrible. Amex has like a crazy one. Amex, actually Robinhood has like a 4% yield, which is pretty insane. If anybody's interested in banking and not losing your money, go ahead and bank with Robinhood. They have a crazy ass yield. Amex is another one that has a crazy yield. Citibank's, I don't think is that good. I think that Citibank's offer is good for loans right now. Their loan products offers are not that bad. In case anyone's interested, I wouldn't take it, but it's not as bad as it's been all year, right? Citi's sitting above the 20-day, the 50-day, and the 100-day, with the 200-day rapidly approaching. We're sitting right underneath that trend line right there. And the 200 days is the additional trend line for the week, right? For the year. All year long has been a strong resistance. So what I do like though is I like the higher low that we set up right here, right? We set up this higher low, and we have the inside bar in the month pretty much everywhere, but I do like it. It's a clean setup to the upside with a nice strong trend. A little bit of resistance at the 50-day, as you can tell by the 1 hour chart. A little bit of resistance here at the 50-day. Tested it twice and then continued to move up. So that's Citi. Let me look at. Just do a quick sweep of the banks. Bank of America, which is the world's worst bank. I think Wells Fargo is pretty shitty too. Same thing. It has kind of an inverse head and shoulders forming on a weekly. This one looks worse a little bit, only because if you look at the monthly chart, it does have that inside bar, but look at how low within that range of that bar we are, right? We have to undo this entire bar. It'll probably take 2 months to do it, 2-3 months to do it. This is a very, very nasty bar for Bank of America. But yeah, I mean, it has that same higher low on a weekly, and we've taken out the previous resistance here. Now we got to kind of test this level at 35.89, 37.85, and then we can play the rest of these up. Yeah, this time of year, banks are good for the upside move. They're gonna announce their buybacks, and the market's gonna say, hey, you know what? I want to play. So let's see. Their earnings is on Friday, so we might have a trade here with Bank of America this week. Actually, daily doesn't look bad. Let's see. I would like to see it above the 50-day, so I'm gonna go ahead and just give myself an alert above this 50-day. Above 35.06. See what it does. Yeah, it looks pretty strong. I mean, it's holding trend, forming higher highs, higher lows. Kind of a head and shoulders here. right? So we got to take out this high, this 34.78. We got to take that out before we can get serious. That we formed last week. So next one, that let's look at JPM, and let's look at XLF. Let's look at Goldman first, real quick. Goldman, yeah, I mean, it looks just like the other ones. Inverse head and shoulders. This one has a much higher shoulder, and it hasn't turned around as quickly. Although what I do love about Goldman is this sideways, all the sideways action right here, right around that 100-day too. Goldman is pinched right between 100-day and the 20-day. So you can see the clear range here on the daily. Clear range on the daily. Let's zoom in on that a little bit. Clear range on the daily, and so what I want to see it is I want to see it above this pivot right here, 350.28. The reason why I didn't want to take it above the previous pivot, this one here, is because we've kind of absorbed some of that sell pressure already, right? And we formed a doji here. We fell back down to the 100-day, formed a doji on it, and then we fell back down to the 100-day. The next day formed a strong buying presence at that 100-day. So I think that that's a good fuel for a continuation move right through this line. So this is the line that I want to see us capture, that 350. And then from 350, we can hit the top of this candle here. I bet you there's a bunch of sellers here in this area, and then above that we can hit the 50-day right there. So those are my levels for Goldman. Yeah, I don't really like playing this ticker because it gets, the reason why I don't like playing is because I like, I'm primarily a swing trader, and although I've been scalping all year, but I'm primarily a swing trader, and I just don't like this kind of choppiness. I don't like the gaps up and down. I don't really like them. But if you catch it on a day that it moves and it makes a candlestick like this, it'll pay you very, very well. Let's look at XLF, and then I want to look at that. I want to check out that couple more that you guys have here. XLF looks very strong. I mean, it has the inside bar on the month, but it's within more than halfway of the range of the previous bar, so that's nice. It's already undoing a lot of that previous bar. Obviously, the constituents of XLF are all the companies that we went through, plus others, right? BX, Blackstone, who else? There's a bunch of banks and banking adjacent companies that are involved in XLF, which is why the chart looks a little bit different. But we have a nice higher low on the monthly here. We are forming this kind of wedge on the monthly, interesting wedge that we're in right now. So I would be curious to see how it reacts at this previous level here at 35, 36, around that level. XLF is nice. The only thing with XLF is it moves so slowly. You have to really buy time on it. And if you buy time, I mean, it's pretty cheap. You could buy months out, and it's really cheap. And I would say that maybe the 40 calls for summertime are probably good for XLF, only because this is buyback season. So usually when they announce buybacks, and I wouldn't do it prematurely. I would wait until they announce, the first bank announces it, which I think it looks like it might be Citigroup. When they announce it, their buyback program, then from there it kind of, and if they have positive earnings, which I really don't know how they're going to do based on people not really spending money last year like that. Maybe the beginning of the year was enough. I don't know. But if they announce buybacks and the sentiment's good, then all the banks will rip. All of them will pretty much rip. And so 40 would be a good, nice target out for maybe March or maybe June. 40s are probably in play for XLF. So let's see. Next one is UNH. UNH monthly. Where's my mouse? UNH monthly has been on an absolute tear. And now we've kind of formed three back-to-back. So one kind of hanging man, and then like an inside red bar, and then a big pukey bar so far in January, right? And that's just, I mean, if you look at it, it's just one candlestick that's formed that. They report Friday morning. I'm not really in touch with the healthcare sector. So I don't know how they stand to benefit, right? Like, I don't know, I guess a bunch of people went and got their flu shots, and a bunch of people went, a bunch of kids and new college students went and got all their check-ins for the year, right? And I think that we can capture some of that activity, some of that payout, insurance payout here in this earnings season. Although I'm just not quite sure if that's how it works. I really don't pay attention to healthcare as a sector, to be very honest with you. But based on where it's at with technicals, let me see. And I wonder why I dumped like this. So they're saying recession risk. There was a healthcare conference. Okay. Let me see. What else you got? Oops. Let's see. U.S. stocks starting at 20 much cheaper levels. Wall Street biggest one of the higher rates. Okay. Where do you mention UNH? The profit picture will start to become clear as fourth quarter earnings seasons kick off next week. Also, they just mentioned that they're reporting earnings. So, okay. So basically, let's see. And then now says there's open enrollment for all healthcare insurance, usually in October, November. That's correct. They are one of the top healthcare insurance companies. Maybe earnings will capture new subscribers. So agreed. Now, to line up with that, I think that a strong jobs numbers means lots of new enrollment, right? But then also like a weak job numbers means they don't have to pay out as much. There's like less people to capture for payouts. So I don't know. It's interesting. It's just an interesting thing. It's like something interesting to look at. So I would probably want to listen to that call and pick up and see what they have to say, right? See how they talk about what's going on. You know, what moves their stock, et cetera, et cetera. Whatever you think it is, like if it's good for the people, it's probably bad for shareholders, right? So think if it's bad for the people, then it's good for shareholders. So hopefully it's bad for the people, right? Which sounds terrible to say, but it is what it is in the market, right? So what else? Let me see. What's this healthcare? Earnings watch. So it's just talking about earnings. When's the? Oh, it's not gonna do it. Try Control F. Let me see. It's just gonna mention that they have earnings on Friday. And that's it. All right. I mean, yeah, there's not. I read something about a JP Morgan health conference, but I don't see it anywhere here. Oh, here we go. Companies in the healthcare sector. So this is Monday. This is tomorrow. Companies in the healthcare sector due to present at the JP Morgan Healthcare Conference, including BMY. So they're presenting. Some of these companies are presenting. So I would just take a look at that and see if maybe there's a potential for a sympathy play, right, with some of these healthcare names. There's a retail. Oh, so this is interesting. Let me save that. This is interesting for tomorrow. Interesting. I'm just gonna leave this here. Somebody do me a favor and just that thing that I posted in the hotline chat, go ahead and post it on Trade Floor for me, please, so I can repost it tomorrow morning. All right, so interesting occurrences. Anyway, looking back at the 1 hour, I see bear flag breakdown. You know, now we have like a kind of two little mini bear flags here. We're underneath all the major moving averages. With the 20 crossing through the 50 and the 100 day. So with earnings, I mean, it can really go in any direction, right? What I want to do is if we're bullish, I want to see a recapture this moving average here, this 495.78-ish, and 500, right? 500 are going to be 495 and 500 are going to be the targets to recapture before we get bullish. That 500, I bet, is going to be very, very tough, especially since it's a nice round number. It is where the previous support was. Hold on, let me just draw it over here. It is where previous support was back in June of last year. So that's going to be kind of a key area to watch. I would get bullish only above those levels because it would have undone some of this, some of this mess. And then break down below the low of day, 487.78. I would just slam puts. I would slam 480s. Right. And with this, you could probably play like 10 points, 20 points out because it makes such big moves. This candlestick right here, this one candle is high of 518, low of 500. It's a $18 candle. So you can get nice moves out of UNH, which is why I think Nell's always watching it, and always making money off of it, more importantly, right? So that's UNH. So let's keep that on watch. Actually, I'm going to throw that. Isn't that on this list? Oh, look at that. It's not on my list. UNH, you on my list. Add it to the list for this week. All right. Let's look at INVZ. INVZ, what does this company do? Tell me what this company does.
Company for kind of like keeping track of vehicles spaced in between each other and like oncoming vehicles, like for the EVs, you know, or the companies come out, you know, keep track where they are on the road.
Got it.
So you slow it down, that sort of stuff.
LiDAR. They look and they say, all right, I'm 10 feet away from this car. The car behind me is 8 feet away. I need to slow down at this rate in order to not crash. Okay, yeah. Cool technology. All right. I mean, so with Commons, my strategy for Commons is way different than my strategy for options. Obviously, I would wait for it to recapture this 200-day personally. Although any buy below the 200-day is probably a good buy as long as you believe in the company and you have a long-term outlook. As long as you have a long-term outlook, Commons are like, you know, if you're holding, you know, and you're not ready to pull out in like 5 years because you're retiring, if you're going to hold it for years and years and years and years, this is a company that as long as the financials are good, as long as the technology is good and they're constantly kind of changing and evolving, and this type of technology hasn't been widely adopted yet by most car companies, although I think now they're starting to. This year, next year, you're going to see a lot of this technology on these cars. Like I know Toyota has them. I know BMW has them. I know obviously Tesla has their own version of it. I think Honda has it. And so Innoviz is probably one of the companies that is like, because this is all that they do. Like they're not car companies, they're technology companies. So like they can focus on the technology. So they'll license their services out to these other companies, or they'll sell their licenses out to these other companies, or they'll just get absorbed by maybe a GM or something like that, right? So I like it. I love this kind of, you know, this is like the type of future that I want to live in, where all the cars are kind of driving themselves. And if you want to take control of a car, then you got to get a car with no GPS, et cetera, and do it like iRobot or whatever. But I like the technology. I think it's great. I think that in 10 years, we're going to be looking at a way different share price, as long as this company stays within favor and keeps their practice ethical, and because it's kind of a blurry line right now, obviously, with this type of technology. So yeah, I think it's good. I mean, I would personally wait until it gets back above the 200-day, because if it stays below that 200-day, it can stay below for a very long time. You know, it's been below the 200-day since kind of where we at, since May of 2021. It kind of went sideways around there for a bit, and then around that time, it just kind of fell underneath it, and that was that. Now, you know, so it's a good spot. I mean, looking at it and then looking at it here, it's higher than all the previous lows. It's higher than this low here. Yeah, I mean, I think it's a good spot. Again, I would just probably wait till it gets above the 200. It looks like it can go up above it, you know, in the next couple of days. I love the technology. I think it's great. And yeah, again, the most important thing is like 10-year minimum outlook, 10-year outlook. As long as you believe in this technology, you're researching it, you're strong about it, and you think that the company is a good representation of this technology, then I will go ahead and buy it every paycheck, add some money to it, and put it in an account that you don't even check, and then check it in 10 years. I'm sure you'll be pleasantly surprised. Let's see. And it is kind of in a channel here, but it's kind of at the bottom of the channel, and it can work its way back up easily. So like it could also be a good trade if you want to take it to 5, right? Take it to 5, buy a bunch, take it to 5 and sell. But I can't advise much beyond that. Let's look at Lulu. Can't advise much beyond that. Lululemon made the reversal. made the reversal on the weekly. We had that inside bar last week that we broke out, and kind of buyers stepped in and took control of it. Lulu was similar to like DKS as we expected last week. It was going to make an upside move because a lot of people are buying them during the holidays, right? During the holidays, a lot of people are buying Lululemon. Even with a lot of inventory, Lululemon still selling out a lot of inventory, making a lot of money. Good investor outlook. I think that Lulu, I mean, we did put in a doji here on the gap up. So I want to see it hold. I want to see it kind of hold this. Where is it? This moving average this is a simple moving average for the 1 hour. I would say 320, even just this low of day, which the low here is 326.94. Hold that low of day. Like, even if you put in a red day, I don't care, but come back and hold that low of day and close above that 326.94. And I think that from there we can go to retest that 50 day, which is going to be the first major test. Once we retest that 50 day, I think that from there we can kind of work our way into that gap. Now, I also see that the 20 day, or sorry, the 100 days right underneath that 325.85. So that would be like the level of last resort for me personally. We got that level, and then we got this level. I don't like using a moving average that's falling, such as this 20. You see this gray line, the step right here. I don't like using that as a resistance, because if it bounces off at once and then it comes back and it goes lower, breaks a bunch of support, and then breaks support, and then to catch the 20 day again to bounce on it, like I don't like that. I wanted to catch it on the way up, not on the way down. So and the 20 day on my daily chart is blue, so you can see how rapidly it's falling. So I don't want it to like catch it here and then catch it here and then catch it down here. Like, I don't want it to do that. I want to see it fight that 50 and work through the 50. But I think 50 is the next target, as long as it holds the range of aggressively the range of the day, conservatively the range of the week, and even this 200 day. As long as it can catch that 200 day, it can try to retest that 50. So I like Lulu, and Lulu makes insane moves. So, and it looks like it hasn't really made crazy moves. I mean, obviously it was down here at 312 and now it's at 329. So a nice move up, but stuck in the range for this day, and it finally broke out and it kind of ranged on Friday. So, range contraction leads to range expansion. So as you see, we got all this kind of sideways movement pretty much all week, even though it's trending upward, but pretty much all week has gone sideways. And so what that's doing is it's saving its energy, conserving its energy for a big move, either bouncing off of this moving average here to go up through the 50, or gapping at the 50 and strong Mutombo move to the downside. One or the other. I'm not sure. I do like it, and I'm just eyeballing this gap. I mean, I'm going to set my alert for the gap now, so I never forget about it. I don't know if we're going to get to it right away. I think we're going to probably take a couple of weeks. Unless we take that 50 out immediately this week, right? They don't have earnings or anything anytime soon. And it's going to be the same story. Yeah, pre-announcements. Oh, so they might have some announcements in tomorrow's ICR conference. So that might be a potential catalyst there. And then the same thing. They had good sales from the holidays. And yeah, I mean, other companies, a lot of that sector is having good news, and so a lot of that sector is going to catch sympathy off of the good news. Not much has changed from last week. We did form a new high. We got above that 200 day. We tested the 200 day 3 days in a row, and we gapped up. So now let's continue to kind of trend upward and get through the 50. The 50 day is going to be very important for Lulu, because that's going to dictate the direction of it. Just go ahead and set another alert right there. I'm setting my alerts, but I know that Jennifer's the ultimate alert. So, when she says Lulu in the chat, or even like JCat, when JCat says Lulu in the chat, you already know what time it is. Let's see. Let's look at Tesla. Tesla is at the bottom of the broadening, almost at the bottom of the broadening. Let me go ahead and extend. Almost at the bottom of the broadening. Tesla's looking ugly, but Tesla is also on sale right now. He said, "Who wears them better?" I don't know. Tesla's on sale right now. I'm expecting Tesla to pull back to this level down here at 36.47, which is insane for me to even hear come out of my mouth. But it is what it is, right? Especially, the market knows that Kathy has a boner for Tesla, and she's been buying, even though everyone's been like really going hard complaining about it. So you see if I get logarithmic. It's ugly, man. That's an ugly chart. Yeah. So, and then if I throw in a volume profile on this, there's all kinds of gaps in this volume profile, because look how quickly Tesla kind of ripped through this area. These two candlesticks ripped through very quickly, and then these 2 days it went insane. So like, if it comes back down to this level, it can easily fall through that level very quickly. Weeks rather. Sorry, these 2 weeks. Let's see. I remember when it did these 2 weeks, I had the crazy FOMO. Oh, sorry, these 2 weeks, I had crazy FOMO those 2 weeks, because I wasn't trading Tesla like that back then. Yeah. It looks like it has nice support down here at 105, right? Nice support at 105. So double bottom. It's also kind of in a range right now. Let's look at this little channel that it's in right now. Right? Little channel that it's in right now. It's at the top of the channel. So let's see what it does. It can easily come down to the bottom of the channel around 70 something, 78, 79. But it looks still very bearish to me. There's a few little gaps to fill. To the upside, there's one right here. This one's already full. I don't know. I really can't call it. I know that it likes this level. It got to this level and bounced twice, and this is kind of the third time we opened underneath it and then gapped right above it. So if we can kind of maintain this level here at 109.96, or rather 110, call it even 110, then we can maybe test some of these moving averages. So 110, 120, 130. Wow. Let me just, for some real perspective, this is what it really looks like here. Reclaim high of day, 120, 125, 130, 20 day. That's the play right there. And if you like downside, then I would hit the 50% rule on this, right? Whatever the mid range for this candlestick is. So let me see. Actually, I'll just draw it. A 50%. Oh shit. At 50% right there. Below 109.99, you can slam puts to the bottom of the range of the candle, which is 101. So you go below 110, you can slam 105 puts, 100 puts, test the bottom of that range again, right? Pretty simple. Above high of day, you can come back to this 118, so you can slam 120s, 125s. So it really depends on where it wants to go. If it is downside, then I would watch that 110 very, very carefully. That 110 is probably the key number for Tesla right now. Let's look at Apple. You got me looking at all the ones I don't want to look at. All of the ones that bring me the most pain. All right, so Apple still broadening, not as far down as Tesla, but it's made a new yearly low as of December, and then we broke that low to make a brand new low January. So we are kind of in a range where buyers like to step in, kind of, right? Like you see this line right here. Let me just zoom in on it on the weekly. Too strong. All right, right here, you see how we're gapped up, pulled back, and then buyers stepped in and it went insane. We're kind of right back in the area where there's some buyers. So maybe there's a potential for for sellers to overtake buyers, as long as we can keep price around this area and bring us down to that 120 level. Below that 120 level, I have that 116 level. So there's some very, very tough levels for Apple to break down. as you can see, I mean, it's been 5 weeks in a row, back to back of just lows. So, I mean, there's more. There's still more. Like Apple still, the high was 180. Let me just draw it. Where is it at? My tool here. We had this high here at 182.94, and now we are the low for the entire move. It took a whole year for it to do it, by the way, but the low for the entire move was 129.62. With the head and shoulders kind of formed, with a failed inverse head and shoulders, a cup and handle to the downside. I mean, it's still very bearish to me. I think we can retest that 124.17. I think we can test that 120 very, very quickly. It really depends on what happens out of the break of this. If you look at the daily chart, out of the break of this range right here, the break of this range will dictate where we go. And then if you look at it on the hourly, we get to this level and we sell off pretty violently, right? We get to this level, we sell off, and we kind of went sideways a bit, and we sold off really, really violently. Double bottom on that area, and double bottom into a bounce. So it's like, this is just like, buyers and sellers are really, really using Apple as a kind of a battleground. If we look at the news, there's some flagship stores are opening up in India, right? QCOM jumps as analyst calls it biggest winner from Apple canceling iPhone SE. So SE is a terrible phone, by the way, and I think they need to scale back on their product line. I think their AirPods sales have declined. So I mean, it's not, in terms of the news, it's not looking really good for Apple. We'll see what happens with earnings. I mean, earnings is what tells it all. So I'll be waiting for earnings. I'm a shareholder. I'm not going to stop being a shareholder, and I'm not going to stop being a consumer of Apple. Right? I have like 7. There's like 7 Apple products right in front of me. There's 5 of them on my right hand side. There's 2 of them on my left hand side. I have my laptop over there and my iPad over there. I have a DJ laptop over there. It's insane. My wife's Mac is behind. Like, it's insane in my house. So, it's hard to be bearish for me on Apple, but it looks very bearish. I mean, it looks like we can come back to test that 120. So I would wait for the break of this range. I wouldn't do anything until this range breaks. Right. I wouldn't play anything until this range breaks. So what I would do is I'm going to go ahead and set an alert at the top of this box here at 131. And I'm going to go ahead and set an alert at the bottom of this box, bottom-ish of this box at 125. And when it triggers, we'll take the direction. Right? And that's it. Keep it very simple. Let's look at Baba, and then we'll look at Costco. Costco is on my list. So we'll look at Costco, and we'll get back into the list. Baba, breaking the downtrend on the, let me get rid of this. Breaking the downtrend on the monthly. Breaking the downtrend on the monthly. You know what? I think I'm crippling myself by not using some of those AV WAPs, but I'm not going to do it now. I'm too far gone. We broke the downtrend on the monthly, broken out of the channel, and now we have some upside targets. That, and that. It looks much more feasible on the weekly, right? Weekly is nice and clean. We got that inverse head and shoulders. Here's a shoulder right here. Here's a head. Here's another shoulder. And then we got that nice candlestick that came in on Friday. Last week. And then Wednesday we gapped up. Thursday we kind of continue to move. Friday we continue to move. So Baba's looking very strong. Baba, I expect resistance at that 113.63 level. A lot of sellers in this candle, and I bet you there's a nice supply zone right here into this gap down. Nice supply zone into this gap down. So what that means is, let me just set some levels real quick here. And then high of day, right? Breakthrough high of day. We got some of these upside targets. We're above all the moving averages, which is very nice, right? Very, very nice. But if price gets up to this area here, I bet you there's a bunch of sell orders just kind of waiting here. You see how quickly we had this one reversal candlestick and then it gapped down. There's a bunch of unfilled orders in this area, right? From here, from these days, even maybe from these days, a bunch of unfilled sell orders sitting right here. So once this comes up to this area, I expect it to go sideways or fall hard, right? But Baba looks really good. Nice inverse head and shoulders on the daily. Here's your right shoulder, right? Here's your head, and here's your left shoulder. This person's upside down. That's why they look like that. And then we're clearly above the neckline. We gapped up, and we have earnings at the end of at the beginning of February, or the end, 3 weeks or so. So Baba is poised very, very nicely, and I think them loosening up on their COVID restrictions is great for them. I think that there was some news about China injecting money into their economy, which comes through these type of in the form of injecting money into the companies that pay the employees. And then, Jack Ma gave up control of Ant Financial. So I think he was still like a major control. He was major, I think either chairman or like a majority stakeholder on the board or something like that. But that was a big catalyst. I think the sentiment towards Jack Ma is negative in the market right now. I'm not sure why. I think that the sentiment changed, and then they kidnapped his ass, and then like nobody liked him anymore after that. It's weird. It's really weird, strange stuff coming out of China. But I think I see a big move here with a good catalyst in the back. Not only this, what they have here, but also with the easing of COVID restrictions. I think that's great for Baba. I think there's a continuation to the upside. I think 110 is going to be a tough level to break. I think above 110, we see 115. Above 115, we get to that 120 level where we're going to find a lot of resistance. And if you want to play to the downside, I would just play the stops. Play the stops. Right. Play the lows of day. And then this won't be your last one, right? This won't be under 96. 100 is going to be tough to break. Under 100, you get 96. Under 96, you get 92. And I would stop my put play right there because there's a bunch of moving averages. We're going to retest that previous resistance line of support. There's a bunch of stuff going on there. There's a bunch of buyers, I'm sure, right here, right before that gap up. So that's your levels for Baba. Let's go into Costco. Costco is not quite on my list for this week, but I do have it to continue to look at it during the week. It's not on my, I have two lists. I have one list that's like a focus list, and I have another list that's like, oh, let this shake out. Costco, if we looked at it last week, we had the long bias. Costco did the same thing as, what was the other one? Was it DKS? Or CAT. It did the same thing as CAT, where it went sideways all week and gapped up on Friday. The reason why I had my long bias is because we were at the bottom of this channel last week and we clearly made a move up. We also had this broadening formation on the daily and we were at the bottom of the broadening, also the bottom of the channel, big move up, right? So as expected, Costco is forming an upside H on the daily, on the 1 hour. And so now I want to see it just test this 50. I want to see it go to the 50 from there. That's the reason why it's like, for me, not really ready yet, because I want to see what it does at the 50. If the 50 were where that 200 days, I would say, oh, let's go. We got space. This thing can easily open up right at 499, 492 and then gap down very easily. And I don't want to play Costco to the downside. I want to play it to the upside, right? I don't want to play it back to the bottom of the channel. I don't want to play it back to the bottom of the broadening. I don't want to play it back to the 20 day. I want to play it up to the top of the channel. I want to play it up to the 200 day. But before I can play it up to the 200 day, we got to play it up to that. We got to see what it's up at that 50 day. So I'll be watching it at the 50 day. I'll go ahead and set my alert since I haven't done it yet. You can see that it's part of my focus list, or part of my almost focus list for next week, for this week. Some of the tickers that we looked at last week are still there, but Costco, I like it to the upside. They have earnings in 2 months, plenty of time for earnings. I bet you the 500 calls are juiced. And that's exactly what I would play. I would play the 500 call. If you like risk, and it opens up exactly where it's at, then go ahead and play it to 500, and sell it at, play the 500 call, sell it at 491. If you buy multiple, then trim, keep your running, and see what happens at the 50 day at 491. That 491, that 50 day is tough for Costco, right? We formed a double top on it right here, here, and here, and fell pretty hard. We always find resistance on it. Sometimes we find support on it, right? So the 50 day is very, very crucial for Costco. So I would just pretty much watch it into the 50 day. And if you see a hard rejection or you see some of that consolidation that occurs like that, occurring at the 50 day flattening, let it fall. You can play puts. So we'll watch it. We'll see what's up. Costco overall, I think I'm very bullish on it because I want to see it hit the top of this broadening daily. I want to see it hit the top of the channel, and I want to see it break out of this monthly bull flag. Right, we got this big flagpole, big sideways consolidation, and it's going to lead to a big breakout, probably into $700, right? Easily in the next 2 years if things shake out the right way. For Costco. So I like it to the upside. I will give you a better perspective of it when I see what it does with this 50 day. Maybe tomorrow we can talk about it a little bit more. Next one on my list is, these are going to go pretty quick. X. X and CLF are pretty much exactly the same. We have a possible 3-bar on the monthly. Possible 3-bar on the monthly. We have, let's move this. Possible 3-bar on the monthly. Right, nothing else to be said there. Inside bar on the monthly, obviously, but we're almost there. We're almost at the top of that range, so we're gonna see what's up at the top of that range. We got that bull flag, right? We got the flagpole here with the flag right here, and now we're kind of at the top of the flag. Let me draw it out real quick. Whoa. We got that, and then we got the flagpole, and we got the flag. Let me draw this flag with no bias. Right, we're just at the top of the flag. We haven't broken out of it yet, but there's like a potential upside H there. Right, bull flag breakout, cup and handle, inverse head and shoulders. There's a bunch of different things on this on X. Let's see what the news says. Oh, and also that last weekly candle of last week engulfed the previous candle, so to the upside, so very strong. United States Steel ratifies new 4-year collective bargaining agreements by United Steelworkers. So it depends, because some of these people are shareholders. Might be good, might be bad. I mean, this is from December 20th. This is news from like almost a month ago. This is news from this candlestick. So we had the reaction to the news already, and then buyers continue to step up and buy it. So big move coming out of whatever news that was way back here, right? Moved up, came back down, back above the 20-day, bounced off the 200-day, and now we're going to see it continue. Look at the hourly. We're above the previous shelves. If you look all the way to the left, all the shelves are all below where we're at now. Those little red lines, right? We have this one here at $26.99. We have this pivot here at $27.45, right? This shelf $26.99, this pivot $27.45. Those are my targets. I want to see it get to the top of that channel, and I want to see it break the channel and try to test. Ultimately, I want to see it take these levels out. That's what I ultimately want to see for X. Right, so, oh, you know what? I think I have a leap that expires soon. Let me take a look. While I'm here, I think it expires like 2 weeks. Let's see. I've been in this play for quite some time. Yeah, it expires. It expires in 2 weeks. I'm gonna hold it. I'm already way in the money. I'm just gonna hold it and let it break out. So yeah, that's what I see on X. I see also kind of a cup and handle on the daily. Here's your cup right here. There's your handle, and we have almost a breakout forming. The next one is CLF. CLF is a little bit stronger. It's kind of already broken out of the inverse head and shoulders. I'll draw it out for you. There's a shoulder, neckline, head, almost at the neckline. Here's a shoulder, neckline. Here's a higher shoulder. It's just like working its way up after making these lows down here. It's kind of rounded off, working its way up. The 200 days where I want to see it above. it's going to hit that 200-day, and it's going to hit it pretty hard, like a wall, especially since that 200-day is leaning downward. You can see at the end of the day on the 1 hour chart on my bottom left, we're kind of felt the heat of the 200-day and went sideways. Still held VWAP, but we want to see it break that 200-day with gusto. And we got some upside targets on the weekly here at 1905, 1990, 2037. After that 2037, we can start to really trade within this range up here. CLF and X are going to do exactly the same thing. So I would just watch one of them, watch both of them, whatever you want. I usually watch X pretty much all the time. Every day I take a look at X like 5 times a day. You'll know. You'll know. Whichever one you like more, just, if you hear me call X, you want to play X, cool. If you want to play CLF, I called X, so go take a look at CLF. If I'm calling X, it'll usually be to the upside. And if I'm calling X, that means that CLF is probably likely above that 200-day. Next one I have is Baidu. I was looking at Baidu, and Baidu and Baba have the same exact catalyst. Baidu and Baba are like brother and sister. When it comes to these Chinese tickers, they always move together. The other ones kind of do too, but these are always constantly moving together. So the look that I like for it is 3 back-to-back higher months, or sorry, 2 back-to-back higher months after the inside month right here, new high. On a weekly, we have kind of a shoulder, head, shoulder breakout, sort of, right? And if you look at, we have this inside day after breaking through the 200-day. So clean targets to the upside and downside. If we get downside, I like the risk better to the downside, because my stop can be 134.16, and my target could be the 200-day, and that'll be a 1 week swing, 10-point move, nice and easy, right? Upside, we have this pivot would be my target for the upside, which is 140.27. So equally as clean, although price is way up here, so the stop is closer, right? My stop will be here if I'm playing downside. If I'm playing upside, then where's my stop, right? Would it be the close of the previous day? Would it be the open of yesterday? Like, what would it be? It's not as well defined as it is here, where this is a very clear stop, 134.09. So the risk reward is better to the downside, but I like this play better to the upside, and then you just have to figure your stop out as you're in. Targeting 135 and then 140, very simple. To the downside, targeting 128 and then 124 and then 120, depending on what it does at that 200-day. So very, very simple play. If you look at the 1 hour, we have a potential double top right here at the 133.58 level. We have one top here, potentially break down through these moving averages, can go back to the 200 pretty quickly. So either way would be a good play. I like it to the upside. Although on the smaller time frame, it does look like there's more downside. It really has to take out that high of day and break that range to the upside in order for me to, for any direction. That's to break the range in order for us to have some conviction in it. So that's Baidu. And I think I have like 2 more. Let's see. NVIDIA, FCX, Square, Duolingo. Okay, NVIDIA inside bar on the weekly, right? What? Inside bar on the weekly. I meant to put tight range on the daily with all moving averages flattening. Inside bar on the weekly. So the range of last week is inside the previous week's range. We have a nice buying pressure these past couple of weeks. We have a tight range. All this price is pretty much within the range of this one candlestick. Even though this one kind of fell out, just don't count it, right? They're all within the range of this one candlestick. I want to see a break above this range and try to test that 50-day before we can kind of see whether it's going to go up or down. I'm looking at 155 calls. I'm going to look at 160 calls for this week. I'm going to go ahead and set my alert to above the high of day. And if you see that tech is moving nicely, if you see Apple's moving nicely, if you see that SPX is moving nicely to the upside, don't wait for the range break. Just take it. NVIDIA is very, very strong. Chips have suffered a lot, but I think that NVIDIA is always going to be a leader. This can also be a massive bear flag. Depending on how you look at it, it could be a massive bear flag on the daily, especially. So it depends. Don't get married to the upside. I like it to the upside, especially after all this basing. And you had a nice 3-bar play to the downside, 1-bar, 2-bar, 3-bar play to the downside. With a gap down, this could have easily continued to slide down. But instead, what it did was it formed a reversal candle, and then it went sideways for 5 days. So if it wanted to continue the downside move, it would have done it. It would have just continued it. It had all its clear targets. This could have been an easy pivot machine gun to the downside, but it's not doing it. So if it does fall, I want to see it catch support at that 100-day moving average, which is at 146.48. I want to see it kind of test that 50. The 50 days is what I'm looking for. And again, I'll be looking at 155 calls, 160 calls, depending on where it's positioned. So let's see. The next one is FCX. Very clear, nice 3-bar play on the monthly. Big bar November, resting bar December, big breakout so far in January. First target would be the high of this month at 43.62. Next target would be the high of this month at 49.67. Look at the weekly. The weekly has back-to-back bull flag breakouts, right? We got that bull flag right here, breakout, bull flag, breakout. Back-to-back, very strong. And on the daily, we got all these little gaps, right? We even went sideways a bunch. Like, this is like a very, very nasty range. Like, look at this. Gap up, gap up, gap up. Sideways, gap down, sideways, gap up, sideways, gap down, gap up. Like, really, really nasty, disgusting price action. But it looks like it's finally made its mind. It let all the moving averages catch up. We got the golden cross right here on December 23rd. And now price is really starting to take off. What's in the news? Oh, they have earnings. When do they have earnings? Next week, the 25th. Freeport McMoran follows copper prices higher on hopes of China-led demand, so looking for China to buy. Copper bounces the Chinese stimulus plans, lift demand hopes. So it's a China play. FCX is now based on the demand from China. So same thing. China restricts, and FCX is I guess China is one of their biggest clients, or maybe it was just kind of slow in demand versus everyone else. And now that's, China produces everything. So if you have China as one of your clients, in this high up in the supply chain, then you're sitting pretty, right? So FCX stands to benefit. Now, the only thing I see that's a negative for FCX is this potential head and shoulders forming on a monthly. We got this shoulder here, we got this head here, and we got the shoulder here, potential shoulder here, right? That's the only thing I can see that's going to slow this down. And then it can easily be, oh, you know what? Nope, sorry. China's COVID restrictions are actually going to get tighter. They can forget about buying steel and copper for now. And then what's going to happen? This thing's going to fall back to the gulag. So I like it to the upside right now. And we'll see what it does at this 43.62. And then we'll watch the news very carefully on it and see what happens. They also have earnings on the 23rd, so we can probably play it till earnings. So we'll see. We'll see with FCX. And then the last one that I have is, or second to last one I have is Square. Square is a falling wedge breakout on the weekly. And then it has moving average support on the daily, right? So we have all three moving averages here, the 20, the 50, and 100. 4 days worth of testing all those moving averages before a big bullish engulfing, or not bullish engulfing, but a big gnarly green bar coming out of all that consolidation. There's one target there. The next target is at 74. Next target is at 75. 75, 77, where the 200 will meet. So I'm expecting this to go back up to the 200 day. Above the 200 day, we can retest this evening star formation on the weekly here at 88.05. Above 88.05, it can really, really get fun for SQ. SQ again is tied to the crypto. Everything is crypto, right? So although I use Cash App pretty regularly, but it's not all crypto obviously, but it's the sentiment. It's strongly tied to crypto, and so people are not the common folk such as you and I are not in love with crypto right now. The meme coin folk are like, yeah, crypto's busting right now. So you gotta really do your homework. I think SQ is gonna be great long term. I think as far as a long term play, I think it's great. If you look at the monthly, it's also basing on a previous demand zone. So if sellers release their hold on it right now, then it can easily come up and, you know, buyers will step in and bring it right back up. And then let's just see what it said. It says, does Block deserve a spot in your portfolio? It's up to you. Block stock upgraded to outperform at Baird. So one of many upgrades 5 days ago for SQ. So I like it to break this 69.35, test that 72.47, next target 75.77, where it's going to meet the 200-day. And the final one that I have, which I like to keep these like an hour and a half, so I'm happy that we're here now, is Duolingo. Duolingo looks very, very bearish to me in the long range, in the long term. But one thing I do see is a bunch of sellers stepped in this past week, or 2 weeks ago rather, bunch of sellers with this long tail. It's pinned between the 20-day and the 50-day moving averages, and we got an inside day, two dojis forming an inside day. So I'm looking for a big move, a candlestick like this one, or like this one, or maybe even like this one coming out of this, through the 50-day to the upside or through the 20-day to the downside. Above the 50-day, we can come back to test this level here. And below the 50-day, below the 20-day, we can come back to test that level there. 75.95 to the upside, 64.73 to the downside. You can play the moving average, the one that's behind your move, as a stop. So if you're playing to the upside, keep the 20 as your stop. If you're playing to the downside, keep the 50 as your stop. If you are risk averse, then I'll go ahead and set my target, set my alert for there. I will set my alert for there and let it break. And then once it breaks, and you see the volume stepping in, then you take your play, and then you don't got to worry about your stop so much. Looking at the hourly, we had the 50-day. We tapped on it pretty much 2 times. Once here, felt the heat on it here, kind of went sideways. It's wedging, which forms candlesticks like these, right? And forms inside bars. So I like it personally to the upside to retest this level, to fake a bunch of people into buying it, right? Trap a bunch of bulls above that 50, hit this level, and then bounce back down. It looks very bearish on the long-term time frame, so I think there's a continuation there to the downside. They have earnings in the end of February. What's going on in the news? Language learners take up Ukrainian and show solidarity. Cool. Price target lowered. This is November 11th. And losses narrow, so they've decreased their losses. I think that some schools are integrating some of this Duolingo's programming into their education, into their plans, right? So I got to dig a little bit more into that, but I like the app. I've used it before I was even in the market. I was using Duolingo, and I think it's cool. My wife uses it. My daughter uses it. They have like a cool little owl or whatever their logo is. If you want to dive deeper into that, I will go ahead and look at and see what insiders are doing. Are they buying or selling, right? See what insiders are doing. And just follow the insiders. I mean, I like the fact that it has a tight range, and that's about it. I mean, there's nothing really. I think I've played this once, and it's not very interesting to play sometimes. Sometimes it just goes sideways, but that's that. Let's look at SPX one more time. ES one more time. So we have, and let's zoom in on this hour. So we have the 50, the 50s crossed through the 100-day a couple of days ago. We broke through the 50 on ES as of today, this session today. Let's look at the 30-minute. And we're really just holding support on that 50-day. Again, in order for us to regain, for bulls to be in control, we got to break above this high right here on Friday. Break above that high. And then we can come up to test some of these upper levels, right? The 4,000. So now the 4,000 is where the 200-day moving average is on ES. So that's like almost very magnetic. Like maybe see like a big move like this, another squeeze up, hit that 200-day, and then smack down to 2,000 SPX. But so far it's looking good. It's holding tight. It's not making any crazy moves. I think it'll make a move early morning, maybe pull back into these moving averages here, these two lines here, and then base, and then from there kind of find the new direction, either turn around or go down pretty hard. But that's it, guys. Thank you for being part of this. I was telling Frank and Jake and Jay and S and DYT that my goal for this year, a major goal of mine, is to hit weekly watch list 50 times, which translates to every week minus 2 weeks, right? So 50 times. I'm gonna hold myself accountable. I want you guys to hold me accountable as well. Even if I can't spend too much time in the market, some weeks I want to be able to prepare everyone, make sure everyone's good to go. Make sure that you have a perspective. Make sure that, hey, I didn't even realize that this stock had this setup, but I peeped it on weekly watch list, and now I'm ready to play it because it's my favorite setup, right? Or whatever the case is. So I want you guys to hold me accountable. So this is 2 of 50. We'll see you for the next one. Thank you guys for being part of this as always. And yeah, that's it, guys. Have a good night, and I'll see you in the morning. Peace.